The market dips but can't break down as we head into the Fed. Can the bears follow through? This is Invest with Jacob. Okay, guys, so as we've been talking about, the market has been trapped in a range, trading sideways for the ES, while the NQ has broken out and outperformed. And yesterday, they started to break down just a little bit, but still couldn't break any major support as we head into the Fed. So now the question is, can the bears follow through? I'll get into that in just one second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, before we jump into the chart, as always, we're going to check out the indicator, but I have something really cool to show you. We started on it yesterday. If you didn't see yesterday's video, please check out what we covered in the indicator. This is so powerful. We've built a custom indicator if you're new here, and it originally was built for day trading and swing trading on the SPY. And what we're finding out is that the swing trading feature is unmatched on all stocks as we go across the market. I'm going to show you two more again today that absolutely have crushed their mega stocks, and the indicator absolutely kills it. So let's jump into the charts and take a look, and I'll explain it from there. Okay, guys, so here is our day trading chart. This is the 5-minute SPY chart, and if you're unfamiliar, this is a trading view chart, which is a charting software that you can get online. You can get a membership, and we have a trading view indicator that you can get in trading view for $59 a month. We'll show you that here, how to get that in just a minute. But what you're seeing here is the market opened at 6:30. Before 6:30 here, you can kind of see the lightly colored yellow on the left is the pre-market, and the blue here on the right is the post-market. And we don't trade those areas, but we do have them on our chart because it helped the indicator find the right entries. And so as they come into 6:30 here, right before the bell, we got a sell. So we don't trade that because it's before the bell. The market goes through a sell, a buy, and then comes down, and we get a buy almost directly at the bottom, and the market just skyrockets straight up for a nice big winning trade. This was an awesome trade. Big winner on that one to the upside. Then it chopped around up here. We found a sell right here. And these two sells are the same because we never got stopped out. The market moved down. The indicator tried to tell us to stop out, but on the very next bar, it still told us to stay in our sell. So we didn't get stopped out. This was a winning trade to the downside. Did very well there. The next entry came after 10 o'clock, and we don't trade the second half of the day. Day trading to me is a morning business. You want to do that before 1 p.m. Eastern Standard Time. I close down at 10 because I'm on the West Coast, so it's Pacific Standard Time. But two good winners again today from the indicator. Another great day. So that's the day trading portion, and this portion has been doing incredibly well. Our day traders have had an incredible year in my room, but you can get this indicator by yourself. You don't even have to get in my rooms. You can have this by yourself and use it at home whenever you want, and it gives you these great entries for these trades. But the swing trading portion, guys, it blows everything out of the water. We're going to take a look at Amazon and Netflix, and the big thing is you just have to make sure it's set up right. So the original setup for the indicator here, it's called IWJ Pivot Point Pro. For the SPY, when we set it up, we wanted to look at the futures chart for the S&P 500 as well as the futures for the NASDAQ, and it kind of puts all that together, and that's kind of how it comes up with its entries and exits. And when we set it up for other stocks, we just have to make sure it's set up properly. So what we're going to do first is look at Amazon. Okay, so here we are on the weekly Amazon chart, and we swing trade off the weekly because these are big trades. These are 3-month plus trades. However long you want to trade, I say a minimum of 3 months, but whatever you're looking at, okay, this is a longer term trade that we do. It's a great buy and hold strategy. It's a great option strategy. If you look at it, I'm telling you it's unmatched. Now, what we have to do is we have to adjust the indicator to our chart. So we click on Pivot Point Pro, we go to the settings. We don't want it to look at ES and NQ anymore. We want everything to be pointed at Amazon. So we click on the bubble, simply type in the ticker, and click on it, and it changes to Amazon. We do the same thing for this one. And that'll give us all of our buy and sell alerts. We're going to look at the last 2 years or so of trading on Amazon. If we go back to the start of 2023, you can see there's a buy here. So what I did is I pulled up current option pricing for Amazon. You can see it on the screen now. And what you can see is that calls right now with Amazon at $231 here. We'll pull it down so we can see $231 up here. Calls are going for almost $17 at this price. These are current calls 3 months out. And puts are going for about $15. Okay? So back here, we're at $80, which is about a third of the price. So we would assume the options were roughly a third of the current price. But let's just say $10 for easy math. That's even higher than a third of the price. A third of the price of $17 is going to be about 5 or 6, but we'll say 10. All right. It gives you a buy signal here at $85. And in 1, 2, 3, 4 weeks, in 1 month's time, the market ran up to 113. So 86 to 113 is $27. So you had a $10 option. Now at price, it's worth $27, plus you have time on that. So it's going to be a $35 option at that point, roughly, or 3.5 times your money in just a month right there. Okay. Now you got to manage your trade and take profit when it's time, or at least take a little bit of profit. You can't just stay in the trade forever. But if you did stay in it, it's no big deal. It keeps going. And if you have a longer term trade, it runs all the way up to 135 before you get the first sell signal. So 86 to 135 is a $50 move up in about 6 months time. And that's an incredible gain on your money if you took a longer term option for 6 or 9 months or something like that. But you, right out the rip, you got a huge gain. On the way back down here, so you get a sell, by the way. And that sell comes down a little bit but fails because you get a sell stop. And that means you stay on trend, so you would have got back long here. That trade wouldn't have been very good. Neither of these trades would have been very good. That happens. It's part of what you're looking for. But they get the top nailed right here. 138, you get in short. The shorts were about $15. We're going to say this one's probably about, we'll just say 10, okay, because it's much cheaper in price right now. And they run it from 138 all the way down to 119, which is a $20 move down. And you had a $10 option, plus you still had time on that. So you made double your money plus time. Here, you get your next buy signal. That buy signal was at 137. That ran all the way up to 155, so another $20 move higher before you got your first sell signal. This trade did not work out. Then you get another sell stop, tells you to get long again. So you get long at about 150, runs all the way up to 180. So that's a $30 move up. I mean, these are straight up moves, guys. Yes, there's a couple of losing trades in here because that's part of trading. If every trade was a winner, I'd be a billionaire. But this is incredible. I can keep going. You can see how this is going. They go up again here. You get a sell. You get a sell stop. They come up. This sells perfect. 185 down to 166. Another $20 move in Amazon. This sell here is perfect. You get in around 185 all the way down to 151, a $35 move down. This buy here is perfect. 185 up to, so far, 230, a $50 move up. So you can see that this indicator is crushing on the weekly charts. It is the best swing trade indicator there is, and at least I believe it is, and I put my money on it. I'll tell you about that in just a second. Let's look at one more, though, for comparison. Let's look at Netflix. So now we've seen Nvidia, Amazon, Bitcoin, and now Netflix. These are big stocks. If you're investing in those already, this is going to help your portfolio grow so fast. All right, guys, so here we are on the weekly chart for Amazon. And remember, we get our indicator. We make sure it's pointed at the right thing. So I'm going to pull it up so you can see they're both on Netflix. You get your sell signal here. This sell signal here is outrageous. You get it at $666. And they run it, before you get your buy signal, they run it all the way down to 337. That's a 300-point move straight down, a 50% haircut on the stock. And you knew to be out of the stock, short the stock, whatever you needed to do, you knew it was coming with my indicator. The buy signal here didn't work out. You get the long stop, means get back short. It runs all the way from here up at 350 down to 160. So another 200-point drop there. This buy signal runs straight up from 173 to 295. You can't find better trades than this, guys. It's unbelievable. We can keep going. These sells are not going to work out, so you got to keep getting long. These longs are, this long here was 309 up to 376. That's a 75-point move straight up. This short was 351 down to 280, straight down. You get the buy signal right here. This buy is 350 up to 488, straight up. This buy signal right here, it's 426 up to 630, 200 points straight up. Guys, these are unbelievable trades. I don't know what you're waiting for. This is helping traders crush the market. It is absolutely awesome. If you want to get it, I don't know what you're looking for or what you're waiting for, but I'm going to tell you how to do it. Right now, there's a link down in the description. Go ahead and click that link. It will take you right over to the TradingView indicator page on my website. You can get it for just $59 a month. You saw those trades, guys. It's going to pay for itself so fast, it won't matter how much it costs. But it's $59 a month, or I give you 2 months free if you go for the yearly to get a better discount, to get a better deal. This indicator is going to crush. So check it out. Look down here. You can see what people are saying about it. They're absolutely loving it. It's a tool that I want you to have, and what I do is I give you a 30-day money-back guarantee so that you can start using it and make sure it does everything I say it's supposed to do, and then you will understand the power of this indicator. Guys, check it out. I think you're going to love it. All right, now let's jump into the chart and take a look. Okay, guys, so here we are on the 1-hour futures chart for the SP 500, and so far the market continues to chop back and forth here. You got kind of a falling triangle, though, and these tend to fall to the downside, just like a rising triangle goes to the upside. You've got this kind of downward high movement coming back and attacking the same area. This tends to follow through to the downside. We've been talking about, it was 59.50 to 6,000 before contract roll yesterday. The contracts rolled over, so prices are higher. So we are looking at the 60.70 to 60.20 area. It's effectively the same thing, but after contract roll, you have to make that adjustment. So we are looking for a potential breakdown here into that area during the Fed, but I do suspect that area gets bought. And that would be, if that happens, if they are able to break down tomorrow into that area, I would look for this kind of move for wave 4 to finish and then start wave 5 up. Now remember, we are dealing in a diagonal pattern, so I would want to see ideally about 60.25 on the move down into the wave 1 top. It also comes into the daily 21-day moving average. So I'd look for that, and then of course we are dealing into diagonal, so this would be an ABC up, but I would look for this to get bought and then the market to be bullish through the rest of the year into start of January, and then we'll see from there what kind of structure we are in and where we are at now. If they shoot down and they can't break through, or they do break through, excuse me, if they shoot down and they do break through, then we really are watching this level here at 59.50 very strongly, this wave 2 low. Should they break below that, that's the first warning to the bulls that something bigger may be brewing, whether that's a bigger term top or a shorter term top, we'll have to see, but that would be a warning if the bulls give up this level at 59.50. Again, I suspect they'll buy up here around 6,025 or so, and then I would look higher from there into the end of the year. If and when they break over 61.71 here, this consolidation of highs across here, that would lead to a squeeze to the upside, and I would suspect we would see 62.70 pretty quickly. Or roughly 6,200 on the SPX pretty quickly. This would be where I'm looking for them to break through. And once they do that, that would result in a squeeze. So if they do it directly, then look for a squeeze. If they pull back first, look for it to get bought and then squeeze higher. Over on the NASDAQ. Now the NASDAQ is a little bit different than the S&P as it has broken out to new highs. It already performed that squeeze, so it got through this high here and squeezed straight up. The numbers changed a little bit because of the contract roll. That's just part of dealing with futures. So we are still looking at the 22,750 to 23,000 plus area on the NASDAQ. And off of this move, we're looking at one of two scenarios. One, this is going to be an A, B, C like so. And I suspect they would hold around this 21,900 area should we see that. Or we're looking at a bigger kind of 1-2 setup, where you have 1, 2, and then you look for 3, 4, and 5 up more directly. And the NASDAQ has been outperforming. That is a very viable possibility to complete this C wave of this diagonal of wave 5 here. And then we would look for the market to turn down off of this area. And how it turns down and where it turns down and the kind of structure we get will tell us a little bit more about exactly what we're looking at in this kind of topping area. Now, if they are unable to hold this B wave low, it's very likely they are going to come down and test this 21.7 area. And if they can't hold this, the NASDAQ can slide pretty quickly. So this low right here at 21.7 is your key level to the downside. Right now, they do have pressure to the upside. They would look to continue. And I think the most likely scenario is you see the ES pull back into that 60.20 to 60.70 area. You see a B wave pullback here and then C up to conclude the moves. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you right over to the website. Once you're there, check out our membership plans area. We have 2 incredible monthly plans, and they both come with a 7-day free trial. And that's because I want you to get in there, make sure you love it, check it out. Make sure it's what I say it is. You can get in there and never trade, never spend a penny, just watch and listen, and make sure it's for you before you ever get involved. You literally have nothing to lose by checking us out, and you can cancel at any time. We also have our educational material, our Elliott Wave for Beginners online course, as well as our Advanced Elliott Wave course. These courses are helping traders understand how the market works, where these key levels are, how the dynamics are, and why the market trades like it does. It makes an irrational market seem very rational and understandable. In the advanced course, we're going through these exact scenarios right now, where we're going through these advanced fib levels, these diagonals, these double and triple threes, flats, triangles, trading Elliott Wave, everything you need to know in these complex markets to understand and trade effectively. Now, as you can see on our screen, the traders are loving it, but if it's not for you or you're just getting started in Elliott Wave, we do have our Elliott Wave for Beginners online course. And this course is helping real traders make real money and finally understand the market in a way that makes sense. It is so confusing when good news makes the market go down and bad news makes the market go up. That's because Elliott knew that the news didn't matter long ago and that key levels do matter. He knows what happens when those key levels break and what happens when they hold, and this is a huge advantage over the rest of the market. This course here is 25 videos in 3 parts, where we go through your introduction, we go through the expectations, your mindset and emotion, the KISS method, and why this works. We go through the chart setup and tools so that you can get every tool you need to use with Elliott Wave Theory, how we use it and why. And then we go through the Elliott Wave for Beginners area, where we go through each of the waves, how to measure them, how to understand their targets, the key levels, how to trade off of those key levels, everything you need to know to make sense of an irrational market. Now, the really cool thing about these courses is if you want to get them at a discount, we do have our bundle pack that gives you $37 off if you get both courses at once. However, if you just want to get them for free, check out our membership plans area, as they are included in this price. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday call that lasts about an hour where we go through all the stocks, all your questions, trading advice, training on how to understand price action, key levels, everything else. That call alone is worth the price of admission. And then you also get all of our training material. You get both the Elliott Wave for Beginners and advanced courses. We trade the SPY and the QQQ, so and we swing in day trades. So we do trade quite often in my room. And if you're looking for individual stocks, futures trading, income trading, and advanced training, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as the individual stocks, the income trading, the futures trading, and his reduced risk binary method that absolutely crushes the market. He gets you in at a cheap price, gets you big multiples on your money, and it's how he structures his trades that's so unique. Something you have to see to understand, which is another reason you give that 7-day free trial. He also started a challenge account where he put $4,000 into an account trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we'd love to have you in these rooms so we can all make money together. All right, our key takeaways for today. ES is trapped in a range. Breaking down through the bottom of this range should take us to the 60.20 to 60.70 area. From there, we would look for buying from the bulls and a rip back in the other direction towards the 6,300, 6,370 area overall. A direct break higher would lead to a squeeze to that area more quickly. On the NASDAQ, we have a couple scenarios for a pullback, a wave B that would hold this low or a 1-2 setup. As long as they hold this wave B low, we would look for them to continue directly toward 23,000 plus. If they do break that low, we would look at the 21,700 area next. Guys, that is your market update for today. I'll talk to you tomorrow.